Hello guys, welcome to my channel Market Bender. Hope you guys are doing well. So we're back again with another video. This is our weekend special analysis video update on crude oil and natural gas. So last week was very happening in terms of uh, the price fluctuations that we have seen for crude oil and natural gas. And I think we should begin with all the events that have happened last week that are now going to impact the future crude oil and natural gas prices. So beginning with crude oil, um, now we already know that in the market right now there is a pressure on global crude supplies. And the latest report that was released on 8th of January for US crude oil inventories, it shows that the actual change was less than what they actually forecasted. So it actual change was 0.959 million barrels less inventory than what they projected. The forecast was minus 1.8 million barrels, which they were expecting a larger decrease, but that didn't happen. And it suggests that the more crude oil remain in the storage, and although the inventory trend shows that inventory has been declining in the past two periods. So previous period was minus 1.178 million barrel, and then latest one is minus 0.959 million barrel. And the trend shows that the demand is increasing with a reduced production, and then combination of all the other factors uh, that is causing this issue. So if you talk about Trump's decision on putting sanction on more than 100 Russian vessels, um, that is going to cause some impact also in terms of where the crude oil prices are going to go in the next coming weeks. uh, and I feel that although everybody is saying that crude oil prices are going to go higher, this uh, whatever happened last week on Friday, I think this is going to put more fuel and fire to crude oil prices. Um, Now, projection for crude oil for next week, especially for Monday, the important levels that uh, we should be looking for is if you look at the 4 hour time frame trend, you will see that crude oil was moving in a consolidation zone. So for around 4 or 5 days, it moved in a consolidation zone from 6300 to 6400, and then we saw that breakout that we have seen on Friday, and it basically tested the higher levels. So first, as I told earlier, that the first level, the target that we can put for crude oil on Friday was 6400, and then it basically broke all the higher levels, like it went to 6500, it broke that also, and it touched almost 6700 and then retraced back. So after 6700, it basically took a price correction, and ended the day eventually on 6577. Now, if you look at the move also, technically, um, you will see if you look at Friday's move. So price almost, you know, came back, and the price correction was till 0.61861% level, and then it closed at 65 64 around 38% level. And what we can expect is that when the market opens on Monday, don't be surprised if you see a gap up opening for crude oil. So when you plan trade on Monday, plan your first target level. If the market opens up, opens gap up, then look for technical resistances. So I would say that first target you should take as 6600, 6633. uh, then you take previous high, which is 6700, because I think these are the two important levels that price will try to test again. After 6800, I would suggest you to trail your stop losses. It is very unlikely that crude oil will test the support. If in case it breaks down 6400 level, it might go back to the consolidation range to support this important range, and then it tries to go back up. So on the shorter side, if that happens, then you can plan a trade according to this support first. Make sure that when the price breaks down 6400 level with a bearish candle and crosses 9 EMA, you can plan a trade with a target of 6300, and then beyond that, second target would be 6200. Although I don't expect that price to break down and do price correction to 6200, because all the events that has happened, they suggest otherwise. So this is for crude oil. Moving on to natural gas, on Friday, we see very bull moves on natural gas on Friday. As I told you that natural gas is basically was taking resistance at 315 level, and when you will see that as soon as it broke the resistance, it basically tested the higher levels, and it hit basically the first take profit, which was at 333, which I mentioned in my last video, that this will be the first take profit, and the second take profit will the previous high. This is 354. So natural gas, when opens on Monday, it might try to test the higher level, which is 354, and it might happen that you know after testing the higher level, if it doesn't breaks the resistance at 354, then it might do some price correction, come back to the crucial support, which is 315, and then it might retest the higher level again. Because why I think that this is a probability, because if you look at the actual numbers for natural gas. So the latest report for natural gas inventory for US shows that the actual change in natural gas storage was minus 40 billion, and their forecast was minus 39 billion. So it was pretty much close to what they forecasted. If you compare this to the previous change in storage, it is less, because in previous update the uh, storage was minus 116 billion, which was very much larger than the current change. So this indicates that the rate of storage depletion has slowed down. And if you talk about the update from US Energy Information Administration, the weather forecast for first quarter of 2025 is milder than normal, uh, which might indicate that less natural gas will be withdrawn from inventory. And the EIA expect that the dry natural gas production would average around 103 billion cubic feet per day in the first quarter of 2025, which is the same as the fourth quarter of 2024. And all these factors, somehow indicate that we might see increase in natural gas prices as well, although not that significant. You might see that after testing the higher levels there might be some consolidation, and then after some time you might see another move in natural gas. So for Monday, if natural gas opens at the same level or gaps up, then the first target would be 354. If it breaks 354, then the next target will be technical resistance as 400. On the shorter side, if natural gas breaks the crucial support, which is at 315, that first target on the shorter side with a bearish bullish bearish candle with volume, uh, it would be around 299 the first target, and then 280 the second target. Now I would highly recommend you that if you're planning your trades, uh, as per what price indicates here, I would suggest you that you also take consider risk uh, you know management in your trade, because you know to be a profitable trader, it is very important that you manage your risk in every trade. And yeah, so that's about it. So this is what it is. I positively feel that the prices for crude oil and natural gas, at least for next 1 or 2 days, you might see some bullish moves. So plan your trades according to how price moves and how it where exactly it opens. So if you have any questions related to my analysis, please comment. Please like my video, and if you want real-time updates, please subscribe to my channel to support my efforts. Thanks, and have a nice weekend.